Good evening, everybody, and welcome to tonight's Tenant Farmers Association webinar, which we will be looking at the lump sum exit scheme for England. I'm Robert Martin, and I'm the TFA National Vice Chairman. While we're waiting for people to join us, I'd like to take you through a few housekeeping rules. The webinar tonight is kindly sponsored by Barclays and will also be recorded. It will be edited and published online via the TFA website and the YouTube channel in a few days' time. So if you want to click onto the YouTube channel, there's a lot of other different things on there as well. Further different scheme updates, carbon credits, public right access. Together with short videos from the TFA and its partners, these cover key issues experienced by the tenant sector. So if you subscribe to there, you'll never miss out on that. Tonight, we're also going to have the opportunity to ask some questions. So if I ask people to put them in the Q&A box instead of chat, then we can pick them up and we can put them to the speakers at the right time in the proceedings tonight. I think at the moment, we're about bang on time to kick off. So I think at the moment, we are looking for quite an interesting chat tonight. The scheme has been very eagerly awaited, and there's a lot of people showing a lot of interest. We've had a lot of people ringing up the office and wanting to know all about it. So we think it's a tremendous opportunity to speak to the people who are really get at the core face of this one. Our three speakers tonight, we have first Claire Williams. Claire leads the direct payment policy team within DEFRA's Future Farming and Countryside programme. Having worked in DEFRA MAF for over 20 years, she has the extensive experience of designing and delivering schemes for farmers. She's currently working closely with the RPA in the run-up to the opening of the BPS lump exit scheme. Claire will be talking us through the scheme, and she will look at who is eligible, how the scheme will work, what the process looks like, and timelines for meeting the scheme requirements. Our second speaker tonight is in-house, and that's Lynette Steel. Lynette joined the TFA as a Farming Policy Adviser in 2018. She advises members on a range of topics, including BPS, environmental stewardship, and other environmental schemes and grants, and working on CAP policy issues in England and Wales. Growing up on a family's dairy farm in Cornwall, and now farms alongside her husband on a tenanted unit with arable in Hampshire. Tonight, Lynette will be highlighting what tenants need to consider before entering the scheme. And our third contributor tonight is also in-house, and that's Caroline Squire. Caroline joined the TFA as an advisor in January 2021. She is a member of the Royal Institute of Chartered Surveyors and is a fellow of the CAAV. Caroline has experience in working across a variety of rural professional matters, including landlord and tenant, valuation, subsidies, stewardship and grants, compensation, and land agency. Caroline is based in South Devon on the family's tenanted sheep and arable farm. She enjoys lambing on the farm in a spare time, and I think there's one or two to lamb tonight for us, so we'll have to keep an eye on that. And the lamb about 400 mules annually. And Caroline will be joining us as part of our question and answer panel later on in the proceedings. So I think we might as well lead off with our first speaker tonight, who is Claire, and I'll just hand over to you for this moment in time, please.
Thank you, Robert. And yeah, thank you for inviting me to take part in this webinar. It's good to see so much interest in it. And we obviously, recognise that the decision to leave farming is a really big one, and there's lots for farmers to consider. So I hope today's session will help people with their considerations. So, I mean, the first thing that I'd really like to emphasise is obviously this is an optional scheme for farmers. So, DEFRA doesn't have a sort of target number of people that we want to take up the scheme. We're not trying to, pressurise anyone to leave who doesn't want to. This is an option that we think could help some farmers, and it's up to everyone to kind of consider what works for their individual circumstances. It'll be a one-off opportunity to apply, so we're only planning to open the scheme for applications in 2022. In terms of the lump sum amount, the lump sum for most farmers will be about the same as you could have received in BPS or delinked payments for the years 2022 to 2027. And that takes into account our planned progressive reductions to the payments as we phase them out by the end of 2027. So in February, we published some guidance about the scheme. So I'm now just going to run through sort of some of the points that were in that guidance and a little bit more about the processes and how it will work in terms of actually kind of getting a lump sum payment. So the key stages, and I'll talk about each of these in a little more detail. The key stages are, firstly, to request a forecast statement, which you've been able to do since February, and you can still do that now. Then there'll be the application process. Then RPA will send you a post application statement. And you have to give up BPS entitlements to RPA and submit evidence that you meet the other scheme rules. And this will need to be done by 31st of May 2024 at the latest in most cases. And then once you've done all that, you can receive the payments. And the earliest we'll be making payments for farmers that have met the rules by then is November 2022. One other thing that's worth flagging is that you can apply for BPS in parallel with the lump sum exit scheme. And we think this could be, an important sort of protection for farmers if you sort of later find out either you're not eligible for the lump sum or you change your mind or you can't sort of transfer your land in time. On to the next slide, please. So the first stage is the request of forecast statements, and hopefully you were all contacted by RPA to explain sort of how you can request the statement. And one of the ways you can do that is just by phoning RPA's normal call centre number and sort of selecting the appropriate options, and that will kind of take you to an automated service. And I would definitely encourage anyone who thinks they might be interested in the scheme to request a forecast statement if you haven't done so already. So the forecast statement shows the lump sum amount you could receive if you meet all of the scheme rules. So it's not at this stage confirmation that you do meet those rules. And it shows the lump sum amount, which is based on a reference amount, which is the average BPS payments made to your business for the years 2019 to 2021. And that amount is capped at £42,500 and then multiplied by 2.35, which gives the lump sum payment. And the forecast statement sort of shows all of the calculations to arrive at your forecast. And hopefully, in most cases, the amounts will be fairly familiar to you because they're based on your previous BPS payments. So the forecast statement, is based on the data for your business. So that's your SBI. So it doesn't take into account of any relevant business changes that may affect your lump sum payments. So sort of business mergers or splits or inheritance cases. So that's dealt with at a later stage in the process. If having kind of read all the guidance and read the forecast statement, you've got any queries about the data on that statement, then there's a query form on RPA's website that you can use to raise a query about the statement. So that form's not for kind of general queries about the eligibility rules for the scheme. It's sort of specifically about any queries about the statement. And then going on to the next stage in the process. So that's applications. So we're expecting to open the scheme for applications in April, and then the application period will close at the end of September 2022. And you apply through the Rural Payment Service, as is the case with BPS. And then similarly with BPS, there will be an option to apply by paper for farmers that don't normally apply online. And you apply sort of using for your farm business as you would with BPS. So for example, if you're a partnership, you apply as a partnership. So the application itself will be quite a short application. So there'll be your applicant's details, so your SBI, business name, things like that. And it will then ask some questions to check that you meet sort of the basic eligibility rules for the scheme. So that's whether you claimed BPS in 2018 or an earlier scheme year. And if not, whether you meet one of the exceptions to that rule. So that's whether you inherited some agricultural land in England or succeeded to an Agricultural Holdings Act tenancy after 15th of May 2018. And then it will also ask some questions to see whether or not there have been any relevant business changes. So that's business splits, mergers, or if you've inherited a farm since 2008. Which could affect whether you meet the requirements to have claimed BPS in 2018 or earlier, and could potentially affect the reference period, as a 2019 to 2021 reference period, which could affect the lump sum amount that you're due. So, I mean, for example, if your business had sort of split during the reference period, then each of the new businesses could each have a portion of the reference amount. And the application form is the place to tell us about that. So on to the next stage, which is the post application statement. So once you've sent in your application, RPA will check the details on that to make sure that you do meet the requirements to have claimed BPS in 2018 or earlier, or meet one of the exemptions. And RPA will also adjust your reference amount if the details you entered about your business changes mean that an adjustment is appropriate. And then RPA will send you a post-application statement once it's completed those checks. The layout of this will be similar to the forecast statement. It will use the latest reference data, so the BPS 2019 to 2021 reference data that RPA holds. So for most farmers, that will probably be the same as they had when the forecast statement was generated, but if anything has changed, it will use the latest data. It will also take account of the business changes that you told us about on your application form. And it will also show a current lump sum entitlement reduction percentage. And this relates to the rules about having to give up entitlements to RPA. And the basic way those rules work is that if you give up all the entitlements you used to claim BPS 2021, then you won't get a reduction to your lump sum. If you don't give them all up, then you could get a proportionate reduction. You don't have to give up leased in entitlements, but again, you could get a reduction if they're not given up. So then on to the, and again, there is a query form if you want to query anything in the statement. And it's just worth flagging that you can withdraw your application at any time in the process, right up until you're paid. So if you do change your mind, then just write to RPA to withdraw your application. Otherwise, RPA will keep contacting you about your application. So then on to the next stage, which is how you give up your BPS entitlements and submit evidence to show that you meet the rules on transferring land. So there's going to be an entitlements and evidence form to do this. And you'll need to fill that in and send it to RPA by 31st of May 2024 at the latest. Although you can request an extension in a couple of circumstances. So that's for probate cases. And if you're involved with a Agricultural Holdings Act tenancy succession and it's gone to a tribunal, arbitration or court hearing. So you can't be paid until you have submitted this form to RPA. So you use the form to give up entitlements to RPA. So you'll need to confirm that you're giving up all of the English BPS entitlements that you own, and there'll just be a tick box on the form for you to do that. And then for leased in entitlements, if the owner of those entitlements, the lessor, has agreed that they can be given up, and there'll be a section of the form that they can sign for the entitlements to be given up. But as I said, it's not a scheme rule that they are given up. And then this form is also used to provide evidence to show that you've met the rules on transferring land and commons rights. And you'll need to provide sort of documentary evidence of that to a qualified agricultural valuer or a solicitor who will check the evidence and then complete a section of the form. So on to the next slide, please. So the rules that all of this relates to are basically the requirement to transfer out the land in England that was agricultural land at your disposal on 17th of May 2021. So that's the BPS 2021 application deadline. Apart from, you can keep up to 5 hectares of that land and any agricultural land you plant with trees under certain woodland creation schemes. And the scheme guidance we published explains sort of how you can transfer the land, and also explains the rules for how to transfer common rights. And there are some restrictions on who you can transfer land and common rights to. So for sole traders, you can't transfer them to your spouse, civil partner, or anyone you're cohabiting with as a couple. Next slide, please. So on to the best bit. You next you'll receive the payments once you've completed all of those processes. So as I said earlier, payments will be made from November this year for farmers who have already met the rules and sent their evidence by then. But we recognise that for quite a few farmers, that won't happen until much later. If you did receive a BPS 2022 or 2023 payment, then those payment amounts will be deducted from the lump sum payment. And the final entitlement reduction percentage, if there is one, will be calculated based on the entitlements that you actually surrender. And then RPA will send you a remittance advice and claim statement giving you details of your payment. Next slide, please. So once you've received a payment, you won't be eligible for any further BPS or D-linked payments. And you also won't be able to enter into new agreements for sustainable farming incentive and some options in countryside stewardship and local nature recovery. Next slide, please. And just wanted to mention partnerships and limited companies. So in some circumstances, a partnership or limited company can claim the lump sum, even if only some members are leaving the business. All of the partnership or limited companies' English BPS entitlements would still need to be given up. The remaining members of the business could carry on farming and apply under our other schemes. And the lump sum will be paid to the partnership or limited company. Next slide, please. So the guidance and forms are on the website. So that's www.gov.uk/RPA/lump sum exit scheme. And you can contact RPA in the usual way, either via their helpline or writing to them. And as I said, we expect to open applications and issue the final scheme guidance in April this year. Thank you.
That's great. Thank you, Claire, for that. It's been quite a very comprehensive walk through the application process, and I think there'll be more questions to come on that later on. Well, I think if we hand over to Lynette at this point, and hopefully she'll be able to outline what tenants need to consider before applying. Lynette.
Thank you very much, Robert, and thank you, Claire, for that run through and outline of the scheme. So I'm now going to go through some points which tenant farmers specifically, but all farmers, need to consider on a more personal basis when looking at this scheme. As Claire said, there's only one opportunity to apply for the lump sum scheme, and I suppose with all my talks and conversations with members, I'm just here trying to round up some common questions I've been asked, and yeah, hopefully this will answer some of those burning questions which might come later as well this evening. So first of all, consider your current position. Every farm business, every family's position is different. So you need to consider whether the scheme is right for you, but also whether it's right for your business and others within your business. Are there any potential successors which may be in place or looking to come into the farming business in the coming years? And are they able to farm without these BPS payments? As Claire has mentioned, by taking part in the lump sum scheme, you surrender your BPS entitlements and therefore it will no longer be eligible for payments. So really encouraging anybody who will continue on farming in the business or on that land to make sure they do their budgets. Maybe at the moment more than ever, given the price of inputs. Also, you need to consider whether you need to serve a rent review potentially from doing your budgets, whether the rent needs to be reflective of the loss of BPS payments to make those budgets work. Also, I really encourage that if you are farming in a partnership, that all partners fully understand the effect of taking part in the scheme will have on the business. It sounds like an obvious point, but everybody who has a stake in that farming business needs to understand that there will be no more BPS payments by taking part in the scheme. So consider your timelines is something else that I wanted to highlight to you all. The deadline for submitting the evidence form to the RPA is the 31st of May 2024. And as Claire has mentioned in her presentation, extensions can be applied for if you have an AHA tenancy with succession rights and the succession goes to tribunal, arbitration or court. Extensions can also be requested in probate cases. However, there are a number of other factors that need to be considered when you're looking at this deadline, which at the moment seems a long way off, May 2024, but in farming terms, it's not that far away. So you need to consider completing any dilapidations work you may have, negotiating an exit or surrender of the tenancy, sale of live and dead stock, and think about TB testing as well, which is becoming paramount throughout the country, and ensuring that you're clear to sell that livestock. Also, finding alternative accommodation is something that needs to be considered, and I'm sure is at the forefront of everybody's mind, but I felt it was worth highlighting. So you really need to ask yourself whether it's feasible for you to exit within the timelines. If it appears that the deadline cannot be met after you've already applied for the scheme, you can withdraw from the scheme without any sort of penalty or come back on you. You just need to contact the RPA and tell them that you're no longer taking part. However, I think it's really important that that's thought about at the moment. So the next one is consider your tenancy agreement. It sounds really obvious. I get that I'm teaching people to suck eggs here, but think about what kind of agreement you're farming under, an AHA tenancy or an FBT tenancy. Can you agree an amicable surrender agreement rather than having to serve a notice to quit? And if so, consider on what terms. The lump sum scheme requires BPS entitlements to be surrendered to the RPA, and you'll need to ensure they belong to you, the tenant, prior to applying for the scheme. This sort of detail will be in your tenancy agreement, and it's just something worth checking prior to applying for the scheme. And if you're unsure, please contact either myself or one of my colleagues here at the TFA who will be able to advise you on that. As I've already mentioned, you need to consider your budgets. The lump sum scheme is limited to maximum payment of 100,000, and the scheme is never going to provide a sufficient amount of money on its own to assist people into retirement. However, combined with those other available resources, maybe such as settlement negotiations in a surrender of a tenancy, sale of that live or dead stock and other pension provisions, the scheme will benefit some farmers. However, I don't think Claire will be offended if I say that this scheme won't be right for everybody, and it depends on your own unique position. The next slide, thank you. Some other scheme rules that you need to consider. The lump sum requires farmers to hand over land, transfer that land to another party. So you need to think about whether your farming business can cope with that. This scheme does allow you to continue farming, to continue to work in agriculture for somebody else or as a contractor. So it's not that you have to hang up your boots, but you just need to think about whether that's the right thing for you to do. As mentioned, 5 hectares along with the farmhouse and some buildings can be retained. That's not always possible for tenants, I understand. You also need to consider any additional land you own as well as any tenanted land. The scheme takes into account lands that you've previously claimed BPS on, regardless of whether it's owned or rented. So don't be caught out by the different types of land occupation status. You need to consider start having those conversations with your landlord, and is it feasible for you to leave the holding and find that alternative accommodation somewhere else? And Caroline Squire, my colleague's here this evening to be able to answer any tenant specific questions that you may have. Another consideration is what other DEFRA schemes do you have in place on the farm? As applicants will no longer be farming that land, they will need to pay any money back received through schemes such as the Farming Investment Fund or the Countryside Stewardship Capital Grant Scheme. Land in Countryside Stewardship Agreement ideally will be transferred to the incoming occupier. However, in some circumstances where this is not possible, revenue payments will not be required to be repaid. Environmental stewardship agreement holders may have to repay some money received if the new owner occupier does not continue with the agreement. However, as we head into the transition period, we are seeing a high number of higher level scheme stewardship, environmental stewardship agreements coming to a natural end. And if this is you, then you will not have to make any repayments in this case. The next slide, please, Julia. Consider your accounts. We've talked about budgets, but your accounts. We're advising everybody to speak to your accountant as how to best handle tax liability. HMRC, as Claire talked about, have confirmed that the lump sum payment will be treated as capital in nature, and it will be subject to capital gains tax. So we're really advising that people speak to their accountant and how this will work for you and how you can ensure your eligibility for any reliefs which are applicable. And finally, I just wanted to give a mention to delinking, which is quite often not talked about when we're looking at the lump sum scheme. So delinking will be introduced in 2024, and it means that the current area-based payments, BPS payments that we used to, will end at the end of 2023. Entitlements and land will be delinked, and claimants will not need to farm that land in order to receive an annual payment. Those applying for the lump sum exit scheme, however, will not be eligible for these delinked payments, which will diminish until 2027 when BPS is fully phased out. Finally, Robert, I'm sure you're going to say this later, but there's myself and my colleagues in the office who are very happy to talk through with any members, any concerns that they may have, or any questions they have. I know we have a question and answer session now, but when talking about retirement, it's quite often a tricky conversation to have. So please feel free to contact us and we can chat it through with you individually if you feel more comfortable that way. Thank you.
Thank you, Lynette. I think that's a very comprehensive run through of what the tenant needs to look for when they consider joining this scheme. I think at this point I'll ask Caroline to join us, and as you can appreciate, it's been a very busy night on the questions coming in, and we've had quite a lot of questions even before tonight's seminar, going through things. So I think I'll probably lead off, and this is probably one for Claire, and this is a thing that the TFA has pushed along for a long time on the longer term tenancies. Given the government's stated objective to seek longer term tenancy agreements, why did DEFRA not take the opportunity of requiring tenancies over retained land to be at least 10 years, please?
Thank you. Yeah, and this is something we specifically sought views on in our consultation, and sort of the results of that showed that, I mean, it was quite, there were varying views to this, but there were slightly more people sort of supported a 5-year minimum length of tenancy rather than a longer length of tenancy. So we chose 5 years because we sort of recognise that there are some tenants who have told us that they don't necessarily want to commit to a longer tenancy. So we felt going with 5 years was probably just a little bit more flexible.
Right, okay, well, that's grand. We won't be stopping fighting for 10 years, so we'll keep working on that one. We've another one here, and this is from a member in Leicestershire. I'm particularly interested in the effect of the handing back entitlements to the RPA on the tenant-landlord relationship, and likewise tenant to the next tenant. Is there anything there that a tenant leaving can do to make that an easy transition? I don't know whether Caroline or Lynette want to pick this one up.
No, I'll pick that one up. Thank you, Robert.
Thank you.
So to be able to take part in this scheme anyway, the entitlements need to belong to the tenant. So those entitlements are the tenants to use how they wish, be that in the lump sum exit scheme or selling them to the landlord or the incoming tenant, or equally selling them on the open market. So I can't see that it will have a negative impact, particularly on relations, because as the entitlements of the tenants, they're certainly not obliged to sell them to the landlord or the incoming tenant. They are theirs to use as they wish.
Well, that's very good there. That's great. We just had another one come in on the question and answer session. Is a tenancy succession to a family member still allowed if you take the lump sum exit? I don't know who wants to pick that one up.
Do you want me to say? So as far as the scheme rules are concerned, you can't transfer it to a spouse, but you could transfer it to other family members, like sort of a son or daughter or brother, something like that.
Right. No, that's good as that. I don't know if anybody else wants to comment on that one. No, that's fine then. We've got another one coming here from a member from Oxfordshire. What is DEFRA's updated assessment as to what will happen to farm rents in the light of the removal of BPS payments and the operation of the lump sum scheme? Lynette, Caroline?
I can't. I don't know if Claire wants to say anything. I can't speak for DEFRA, but personally, I think BPS has arguably kept rent levels artificially inflated for quite some time now, as it is a guaranteed income stream, and landlords have been wanting a slice of that income. However, with demand massively outstripping supply still for tenanted holdings, we haven't yet seen it feed through into the rental market, a decrease, even though the BPS already has started to be cut, and especially with input costs as they are as well, FBT rents are still holding quite strong. I mean, we very much hope, and logically you would imagine that over time it is going to have to feed through into the rental market, because I mean, these high rents that I hear of daily, I hear of people who are tendering over £200 an acre just for the sake of getting a farm, because demand is massively outstripping supply and competition is huge. But ultimately those rents aren't viable. They're not sustainable in the face of BPS cuts and in the face of rising input costs. So that would be sort of the TFA's assessment. I don't know whether DEFRA would have anything different to add.
Yeah, I mean, we'd also kind of expect rental prices to decrease as we phase out direct payments, and we don't think that the lump sum exit scheme itself is likely to have a significant impact. But yeah, phasing out direct payments, you'd expect to see reductions. I mean, there are obviously other changes happening, you know, across the agricultural transition, which could sort of put an upward pressure on prices, which might sort of mitigate sort of some of the reductions that we could see. But yeah, we don't have a kind of estimate in terms of sort of particular figures at this stage.
It's interesting. I spoke to a farmer today, and he's taking on a lot of land off his neighbour because the price of fertiliser where it's at today, he's going to have to run a more of an extensive system because the fertiliser he probably have to reduce by half and utilise his slurry even more, and that's going to cause a competition for land, and that's going to be the interesting thing moving forwards. If people are all jumping for land to grow their businesses so they can nearly stand still, it is going to put a little bit pressure on there actually. We did have a question come through regarding new starters, and just wondering as to if a new starter does take on a holding after the lump sum has been paid out, is there any payment transition there to help them get started on a new entrance scheme? Because we're still kind of waiting to hear from that one, Claire.
Yeah, so colleagues are sort of working on the sort of new entrance scheme. So they're planning to run sort of pilots this year, and they're currently sort of designing those pilots. We're then looking to sort of roll out the sort of scheme sort of the following year. So yeah, that's very much work in progress, and working kind of closely with sort of a range of stakeholders on the design of that.
Because the interesting thing about any scheme for a startup is how they compete against established businesses. And that, to me, in my area, in a very tightly built area of livestock here, every acre is up for grabs by all and sundry, and the young people just cannot get a start.
Yeah, I think kind of access to land is sort of one of the things in particular that they're looking at as part of the new entrance work.
I suppose something with the county council farms, that was one way for them to get in, but we seem to have lost a lot of them over the last few years. We have another question here coming from a member from Surrey. Given the extent to which the payment is to be encouraged restructuring within the industry, much like redundancy pay, why wasn't a consideration to make at least part of the payment tax-free? So, I mean, the lump sum is, you know, sort of in effect sort of bringing sort of the direct payments money forward, allowing someone to kind of get the money early. And obviously BPS payments are taxed. So I think the lump sum payment was sort of always going to be subject to tax. But we worked sort of very closely with HMRC and Treasury to kind of clarify that tax treatments. And we think that, you know, the position of treating it as capital will be sort of more favourable for most farmers than it would have been if it was sort of taxed as BPS is. Okay, well, thank you for that. We have another question in here from a member from Dartmoor. This is open for everybody. Can the way in which the lump sum is being treated for tax purposes change, or will it be set in stone? If an owner rents his land out for 5 years to take the lump sum, will the tenant still need permission to enter countryside stewardship schemes for that period? And if the landlord technically left the industry, being entitled to a proportion of the income from the environment scheme that the tenant has signed into? I don't know whether that's something for Caroline or for Lynette.
Yeah, I can answer that, and I'm guessing Claire will pull a face if I get the first part wrong. But no, the way it's treated for tax purposes is now set in stone, and that can't be changed. That's been declared by HMRC. With regards to the second part of that question, and this actually feeds into the new legislation around the ELM scheme. So the way the agri-environment schemes are changing is that there's more flexibility, and landlord consent is not required through the scheme rules, as long as the tenant or the occupier has management control for the duration of the agreement. So there is no requirement for the landlords to consent to that scheme taking part on the land. The final part of that question talks about whether they're entitled to a proportion of the income. That's very much down to the terms of your own tenancy agreement. That will not be written into any scheme rules. However, the TFA and CLA have actually this week published some guidance about how tenants and landlords can work together to put into place these agri-environment schemes. So yeah, that's actually been in our e-news this week, which hopefully everybody's received today. But if not, it'll be on the website if people want to look that up.
I suppose following on from that question here, I have more entitlements than are needed to activate the maximum payment for the lump sum exit scheme. Could some of these be sold before entering the scheme without reducing the maximum amount available from the scheme?
I could take that one.
Super.
Yeah, yes, that they can if you're, you obviously want to be sure that you're not selling more entitlements that will then lead to a reduction to your lump sum. But if you're sure that you've got enough, then yes, you could potentially do that.
Right, that's great. Thank you for that. Let's see on here. Yeah, the scheme relates to exiting farms in England and the surrender of English BPS entitlements. How would taking part in the scheme affect applicants' farming if they intended to farm outside of England?
I can take that one if you like, Claire.
Please.
So this is an English scheme only, so it will not affect anybody's ability to claim payments in cross-border situations. They will just need to ensure that they continue to meet the scheme rules in those situations of those devolved nations. Right,
well, that's great. Thank you for that. Another one here, member from Norfolk. I am not fully decided on as to whether I wish to take part. How does the TFA recommend tenants start discussions with their landlords about taking part in the scheme, especially I do not want to show my hand too early?
That one, thank you, Robert. So the team would suggest it's probably a good idea to contact your landlord either by letter or email on a prejudice basis in the first instance, and say something along the lines of you're considering your future options, and would the landlord be open to discussing a surrender of your tenancy? I mean, the landlords are well aware of this scheme in just as much as tenants are, and I am aware of a few instances where I've actually gone around to some of their tenants and given them a bit of a nudge and said, the lump sum exit scheme is coming up. Perhaps you should think about taking it and surrendering the farm. So you may find that landlord also open conversation as such. I mean, if you are opening the conversation yourself, the thing I would say, you don't want to sound too keen so that the landlord thinks you're really desperate to go, and then there's no reason for them to incentivize you, either by perhaps offering a surrender payment or favourable terms to leave on, for example, a no claims basis, perhaps where they don't charge any or make any dilapidations claims. But yeah, I mean, you really know what your future options are with the landlord unless you do a conversation. So it's worth, if the landlord doesn't approach you, it's worth just approaching them on or without prejudice, just to see what they say, whether a surrender might be an option or not.
No, that's good advice there, actually. Another one in here. Where are we at on here? So many questions coming in tonight. It's unreal. If an applicant takes part in the scheme, surrenders land and BPS entitlements, is there any reason why they cannot in the future buy or rent the farm again, acknowledging that they would not be eligible to apply for any other schemes? Is that one for you, Claire, do you think?
Yeah, sure. I mean, we don't expect this scenario to happen much in practice. But there, if somebody did change their minds, they took lump sum and then decided they wanted to, at some point in the future, re-enter farming, they could do that. But as you say, they couldn't claim direct payments, and there would be the restrictions on claiming under other schemes during the rest of the agricultural transition.
And Robert, sorry, just to add on to that, I think it's really important that when we talk about the lump sum scheme, we are talking about it in the terms of DEFRA funded, RPA administered schemes, aren't we, Claire? That's the forum we're talking about it in, which is quite important to remember.
Yeah, absolutely. I suppose we've had quite a lot of questions coming in tonight regarding the Commons grazing rights, and we have one in from a member from Leicestershire. How is it intended that individuals wanting to join the scheme should deal with any registered common grazing rights they hold?
So just in terms of the scheme rules, so I mean, if you've got rights, sort of grazing rights or rights of pannage, which are attached to land. If they're attached to the land that you have to transfer out, then you'll have to transfer those rights. If you've got rights that are held in gross, so are not attached to land, then you also have to transfer those out. And you transfer them in sort of similar ways as you would with land, in terms of, if you own them, you can sort of sell the rights, gift them or lease them out for a minimum of 5 years, where you're kind of obviously leasing them out with the land. And if you're leasing the rights, then you have to give up the lease of those rights.
Right. Okay. I think that's quite clear. I suppose we'll follow on from that one as well here. Is the scheme competitive, or will all applicants, as long as they meet the criteria, be accepted onto the scheme?
Yeah, so all applicants that meet the criteria will be accepted and will be paid the lump sum.
That's super. Thanks for that. Let's clarify that one. Another one here. I am giving up the main farm of 400 acres, but I am a partner with 3 siblings on a 100-acre farm tenancy, which is completely separate from the main holding. Do I have to give up the eligibility for the lump sum exit scheme?
So the scheme works on the basis of your farm business. So if you, for example, apply, you're involved in 2 businesses, for example, that apply with BPS, then you could apply for a lump sum as part of one of those businesses without it affecting your other farm business.
Right, that's great. I think that's clarified for that point there. Goodness me, these questions are just flying in tonight. It's absolutely unreal. It just shows how important it is, really. And this is probably one for one of our girls in the office. If a widow and qualifying tenant is under a case G notice to quit, can they surrender early and still qualify?
They may be able to agree a surrender early, but I think that would be a question for Claire as to whether they'd still be able to qualify for the scheme.
Okay.
I can take that if you like. I think as long as so the application window, as Claire stated, opens in April. So if they were to leave from April onwards, they would still qualify for the scheme, would they not, Claire?
Yes, they would. That's right.
Well, I think that's cleared that one up anyway. So it's an interesting one, really, where we are in this. That we've already mentioned the high cost of production. We have mentioned people who are looking to exit the industry because of also the different ways. And I think if you're able to capitalise on this, then it is a super way of adding to pot of money, as it were, for your pension or for your house or wherever your next stage is to move on from your tenancy. And it is been a huge issue, really, for people making these decisions. And if you've been a tenant for 50, 80, 60, whatever years it is, it's a huge wrench. And I don't envy anybody wanting to take this one forward. Question here from a member in Kent. Can you clarify how the payment calculation was agreed? If I claim for BPS in 2022 and 23, will the payments be deducted from the final lump? So I think you maybe even covered that earlier on actually there, Claire.
So yes, just to confirm, yes, if you're paid BPS in 2022 and or 2023, then that will get deducted from the lump sum payments that you're due.
No, well, I think that's clarified that one there. Well, I think we're coming to a close of our meeting tonight, really. We've answered a lot of questions. I think hopefully people have learned a lot. If they didn't know a lot about the scheme, I think they know where to go to. They need to ring the head office and take your ones working through from there. And we'll just have to go on from there, really. I'm just thinking that we've got another one coming in here. Goodness me. I thought we were finished, but we're not, goodness sake. If a tenant applies for the scheme, but tenant then dies before lump sum is paid, can executors still continue the claim for the lump sum?
Yes.
Good, that's a good one there. And also on here, if a tenant is required to leave their entitlements with the holding due to the tenancy, can they buy in additional entitlements now and transfer them out to the landlord or the new tenant, leaving the original entitlements to surrender to the scheme upon retirement?
So as far as the scheme rules are concerned, yes, they can.
Right, okay. That'll please that person there, which is great. Well, I think at that point, I'm about out of my questions for our team here tonight, and I've really enjoyed it tonight. I've learned a lot, and it maybe doesn't persuade me just to retire just yet, but it gives me an insight as to what I need to do if I'm going to do so. So my vote of thanks tonight is to Claire and to Lynette and to Caroline for giving up their time and sharing their expertise. I'd like to thank our sponsor again, who is Barclays. The webinar will be edited and on our website in the next few days. You can get it on the YouTube channel as well. And we've got some really good meetings coming up in the next while. We've got the one with the Tenancy Working Group Chair, Baroness Kate Rock, which I think is going to be absolutely fantastic. And that's going to be hosted on the 6th of April. And then we have another one on the 25th of May, and that's getting the most from your new DEFRA schemes. And that will be, take part will be Janet Hughes. So I think we've had a tremendous night tonight. And all I like to say is good night at this point, and hopefully we'll see you next time round. Good night.